Good morning. Welcome to your daily morning digest for Monday, February 23rd, 2026. I'm your host, and this is the show where we cut through the noise and give you the stories that actually matter: markets, crypto, global news, and the insights that help you start your week sharp. It is Monday, which means the week is wide open. Let's fill it with good information. We've got a packed show today. Rolls-Royce is rewarding shareholders in a big way, a massive aircraft deal is in the works, Switzerland is rethinking its relationship with American tariffs, and in the global news segment, we're covering a major moment in the Ukraine war as it reaches its 4-year anniversary, and one of the most dramatic crime world developments in years, the death of Mexico's most wanted drug lord. Buckle up, let's get into it. Finance and markets. Story number 1: Rolls-Royce drops a $2 billion surprise. Let's start with a feel-good corporate story for shareholders. Rolls-Royce, the iconic British engineering and aviation giant, has announced plans for a $2 billion share buyback program. Sky News broke this story over the weekend, and it's a significant signal from the company. Now, for those who don't follow Rolls-Royce closely, this isn't the luxury car brand, they split from that decades ago. Rolls-Royce Holdings is a world-class aerospace and defense engineering company. They make jet engines for commercial airlines, military aircraft, submarines, and increasingly they're in the nuclear power space with small modular reactors. A $2 billion share buyback says a lot. First, it tells you management believes the stock is undervalued. Second, it signals the company has more cash than it needs for reinvestment right now. Third, it boosts earnings per share for existing investors by reducing the total share count. After years of recovery from the pandemic, which absolutely decimated their civil aviation business, Rolls-Royce has been on a remarkable turnaround journey under CEO Tufan Erginbilgian. This buyback feels like a victory lap. For long-term investors, it's validation. For everyone watching, it's a reminder that old economy industrial companies aren't dead, they can reinvent and reward. DAE Capital, the Dubai-based aircraft leasing powerhouse, is reportedly in advanced talks to acquire Macquarie Air Finance, the aircraft leasing arm of Australian financial giant Macquarie Group. We're talking about one of the biggest deals in the aviation leasing world in years. Aircraft leasing is a fascinating business. Companies buy fleets of planes and lease them to airlines. It's a capital-intensive, relationship-driven industry with enormous barriers to entry. DAE Capital is already one of the world's largest lessors, managing hundreds of aircraft worth tens of billions of dollars. Adding Macquarie Air Finance would significantly expand that portfolio. Why does this matter? First, it's a signal of confidence in commercial aviation's long-term recovery post-pandemic. Airlines need aircraft, air travel demand is surging, and owning the planes that airlines need is a lucrative position. Second, it shows Middle Eastern capital, in this case from Dubai, continuing to expand aggressively into global financial infrastructure. Third, for Macquarie, divesting this business lets them redeploy capital elsewhere and sharpen their focus. In a world of rising consolidation, this deal, if it closes, will reshape the aviation finance landscape. Story number 3: Switzerland quietly waves the white flag on US tariffs. This is a story with significant economic and geopolitical implications. A senior Swiss official has stated that Switzerland may have to accept US tariffs as a permanent fixture, not as a temporary negotiating tactic, but as a new baseline reality. Let that sink in for a moment. Switzerland is one of the world's most trade-savvy economies. They've historically been experts at threading the needle between major powers, neutral in conflicts, disciplined in diplomacy. For a Swiss official to publicly say they may need to accept American tariffs as permanent suggests that Washington's trade posture under the current administration is being viewed as structural, not cyclical. This is part of a broader pattern we've been watching. Countries like Switzerland, Japan, Taiwan, and others are recalibrating their trade relationships with the United States. Some are signing bilateral deals. Others, like Switzerland, appear to be in a more defensive crouch. The message here is clear: the era of free trade globalism that dominated the 1990s and 2000s is not coming back anytime soon. If you're running a business with international supply chains or export exposure, take note. The world is repricing trade relationships, and neutral Switzerland accepting tariffs as permanent is a loud signal. Story number 4: Reece Group's half-year results, growth but squeezed margins. Australia's Reece Group, the plumbing, bathroom, and HVAC supplies giant, reported their first half results for 2026. Revenue grew 6%, which on the surface looks solid. But here's the catch: profit margins compressed. They grew the top line but gave some of it back in profitability. This is actually a very common story in the current economic environment, and it's worth understanding why. Reese operates in construction and home renovation supply chains. When the economy is tight, builders and contractors push harder on price. Input costs, shipping, materials, wages stay elevated even as pricing power fades. The result is margin compression despite revenue growth. Reese is a well-run business and a bellwether for the Australian construction sector. The fact that they're growing revenue despite a softer housing market shows underlying resilience. But the margin pressure tells you the easy growth years are behind us for now. This pattern, revenue growth with margin compression, is showing up across many consumer-facing and construction-adjacent businesses globally. Keep an eye on it. Story number 5, G8 Education, an occupancy crisis overshadows quality gains. Australia's G8 Education, the country's largest listed childcare provider, reported its 2025 results. Here's the headline: despite genuine improvements in service quality and operational excellence, the company is battling an occupancy crisis. They're not filling their childcare centres. This is significant because it reveals a structural issue in the Australian childcare market. Costs for families have risen. Government subsidies are under scrutiny. And in some markets, demographic shifts mean fewer children of childcare age. G8 can deliver better quality all day long, but if the seats aren't filled, the economics don't work. This connects to a broader social conversation happening in many developed economies. The cost and availability of childcare is becoming a flashpoint for young families. It affects workforce participation rates, particularly for women. Governments in Australia, the UK, Canada, and elsewhere are wrestling with how much to subsidise childcare. For G8 specifically, solving the occupancy problem is more urgent than quality improvements right now. Investors are watching closely. Story number 6, Wall Street takes a harder look at JFrog amid AI security concerns. Stifel, the investment bank, has cut its price target on JFrog stock, citing AI security concerns. For those unfamiliar, JFrog is a software company specializing in DevSecOps, the intersection of software development, security, and operations. They make tools that help companies manage how software packages flow through development pipelines. Why are AI security concerns hitting JFrog? As companies rush to integrate AI-generated code into their software pipelines, there are real questions about security vulnerabilities. AI can write code fast, but that code needs to be vetted. JFrog's platform is theoretically well positioned for this, but the concern seems to be that the AI security market is evolving faster than JFrog can monetize it, and bigger players like GitHub and cloud providers may cannibalize their niche. The broader theme here is important: AI is creating new security challenges even as it creates opportunities. Companies that can credibly solve AI-generated code security will be valuable. But right now, the market is still figuring out who wins. Stifel's caution on JFrog reflects that uncertainty. Story number 7, CF Industries gets a boost from BofA. Bank of America has raised its price target on CF Industries after the fertilizer giant posted strong fourth-quarter results. CF Industries is one of the world's largest manufacturers of nitrogen fertilizers, ammonia, urea, nitric acid. It's a cyclical business tied to agriculture, energy prices, and global food security. Strong Q4 results in the fertilizer industry signal a few things. Global agricultural demand remains robust. Natural gas prices, the key input for nitrogen fertilizer production, have been somewhat favorable for North American producers like CF. And geopolitical disruptions in the Black Sea region continue to tighten global fertilizer supply chains. BofA's confidence in CF Industries is essentially a bet that the fertilizer supercycle isn't over. For investors interested in the food security and agriculture space, this is a name to watch. Story number 8, Hong Kong eyes a bold move, making room for yuan globalization in its next budget. This is our daily Hong Kong story, and it's a meaty one. With the annual budget announcement approaching, which the Financial Secretary is expected to deliver this week, economists and analysts are debating a provocative idea: should Hong Kong explicitly allocate resources and policy tools to accelerate the internationalization of the Chinese yuan? This is a fascinating conversation. Hong Kong has long been the world's premier offshore yuan center. Dim sum bonds, yuan deposits, cross-border payment rails, they all run through Hong Kong. But the question is whether Hong Kong should double down and become even more aggressive in this role as Beijing pushes for greater global use of the renminbi. The context is important. US dollar dominance is being challenged, slowly but unmistakably, by geopolitical shifts, BRICS initiatives, and China's growing trade relationships. Hong Kong sits at the intersection of East and West in ways no other financial center does. If the budget signals a genuine strategic commitment to yuan globalization infrastructure, it could attract new pools of capital and position the city for the next decade's financial architecture. Keep an eye on the budget announcement, the details will matter enormously. Global news. Now let's step back from markets and look at the world around us, because this Monday brings two enormous stories that deserve serious attention. Story 1, Ukraine, for years of war, and Zelensky says Putin has started World War III. As we approach the 4-year anniversary of Russia's full-scale invasion of Ukraine, which began on February 24, 2022, Ukrainian President Volodymyr Zelensky sat down with BBC journalist Jeremy Bowen for a landmark interview in Kiev. The headline is stark: Zelensky told the BBC that Vladimir Putin has already started World War III, and that the international community must stop him. It's unusually direct language, even for Zelensky, who has been unapologetically blunt throughout this conflict. But what Zelensky is really articulating is something many European security analysts have been saying privately, that Russia's war in Ukraine isn't a regional conflict, it's the opening chapter of a much larger contest over the post-Cold War international order. Think about what has happened in 4 years. Russia has struck civilian infrastructure across Ukraine, power plants, hospitals, residential buildings. Europe has rearmed at a pace not seen since the 1980s. NATO has expanded. Finland and Sweden joined the alliance. The United States has provided hundreds of billions in military assistance, though that support has become increasingly politically fraught. And while peace talks have been floated by various intermediaries including the Trump administration, no sustainable ceasefire has emerged. The human cost is staggering. Hundreds of thousands of casualties on both sides. Millions of Ukrainians displaced. Overnight, we got another reminder of the ongoing violence. Explosions in western Ukraine killed a police officer and injured 25 people in what officials are calling a terror attack. Zelensky's framing, World War III has already started, is a deliberate escalation of narrative. He's trying to wake up those who still believe this war can be contained, compartmentalized, or quietly ended with a territorial compromise. Whether you agree with his framing or not, the 4-year anniversary is a moment to reflect on how dramatically this conflict has reshaped global security, energy markets, food supply chains, and the relationship between democratic and autocratic powers. Story 2, Mexico kills its most wanted man. Del Mencho is dead. This is one of the biggest law enforcement stories in years. Mexican military forces have killed Nemesio Oseguera Cervantes, known universally as the El Mencho, the head of the Jalisco New Generation cartel, known by its Spanish initials CJNG. To understand why this matters, you need to understand what CJNG has become over the past decade. Starting in 2011, El Mencho built CJNG from a regional trafficking organization into arguably the most powerful drug cartel in the world. CJNG is responsible for the majority of fentanyl entering the United States, for massive violence across Mexican states, and for sophisticated money laundering operations spanning multiple continents. El Mencho himself became the face of modern cartel operations, elusive, brutal, and extraordinarily wealthy. The U.S. Drug Enforcement Administration had placed a $10 million bounty on his head. He had been on the U.S. Treasury's sanctions list. He was, in many ways, the world's most wanted drug trafficker. The immediate aftermath of his death has been dramatic and violent. Armed groups aligned with CJNG set fire to cars, trucks, and commercial buildings across multiple Mexican states, a cartel tradition of signaling power and grief simultaneously. This is actually a playbook we've seen before. When a cartel boss dies, the organization often becomes temporarily more violent as internal succession battles erupt. The big questions now are, does CJNG fragment without El Mencho? Does a power vacuum create more bloodshed or less? And what does this mean for the fentanyl crisis hitting the United States? History suggests that decapitating a cartel leadership rarely ends the organization, it often just reshuffles power. The Sinaloa cartel survived the capture of El Chapo. CJNG may well survive the death of El Mencho. But this is still a historic moment and a significant victory for the Mexican government and its security forces. Story 3, Iran, students protest for a second day despite crackdown. In Iran, student protests have entered their second consecutive day in Tehran and other major cities, with demonstrations at universities including the Tehran University of Art. This is happening as the Iranian government is facing a dual pressure: domestic discontent over economic hardship and political repression, combined with external pressure from the United States military buildup in the region. The protests appear to be driven by a combination of factors: high inflation, youth unemployment, restrictions on social freedoms, and ongoing anger over the 2022 killing of Mahsa Amini. The government has responded with its standard playbook: security forces, arrests, and communications disruptions. This comes at a particularly sensitive moment. US-Iran tensions have been escalating, with Washington positioning military assets in the region and Trump administration officials publicly saying they are puzzled why Iran has not yet capitulated in nuclear deal negotiations. That external pressure may be emboldening protesters who want to see regime change, or it may push the government into an even harder crackdown to project strength. For markets, Iran-related developments feed directly into oil price volatility. For the world, this is another reminder that the arc of the Middle East has not bent toward stability, and that Iran's domestic situation and its international posture are deeply intertwined. Practical takeaways. Let's wrap up Monday's digest with 5 sharp takeaways from everything we covered today. Takeaway 1: share buybacks speak louder than press releases. When Rolls-Royce commits $2 billion to buying back its own stock, that is management putting money where their confidence is. Before investing in any company, ask, are they returning cash to shareholders or always asking for more? Companies with consistent buyback programs often have the discipline and cash generation that matter long term. Takeaway 2: the tariff era is structural, not temporary. Switzerland, neutral, trade-savvy Switzerland, is accepting US tariffs as a permanent reality. If you have business, investments, or supply chain exposure to international trade, stop planning for a return to the pre-tariff world. Build your business model around the assumption that this is the new baseline. Takeaway 3: revenue growth without margin growth is a warning sign. The Reese and G8 stories both illustrate this. You can grow the top line while quietly losing ground on profitability. For anyone running a business or analyzing one, watch the margin trend as carefully as the revenue trend. Revenue is vanity, margin is sanity. Takeaway 4: geopolitics is an underrated investment variable. Ukraine's 4-year war has moved energy markets, rerouted global trade, and accelerated defense spending across NATO. The death of El Mencho will affect drug trafficking routes, US border policy, and potentially Mexican political dynamics. These aren't distant news items, they ripple into portfolios, supply chains, and business environments in ways that pure financial analysis misses. Takeaway 5: historical moments matter. Today marks nearly 4 years since Russia invaded Ukraine. El Mencho is dead. These are moments that historians will write about. Paying attention to big, structural shifts, even when they feel distant from your daily life, keeps your mental model of the world accurate. And accurate mental models are the foundation of every good decision, business or personal. These signal that CEOs and boards believe in their businesses and their industries. Animal spirits are alive. On the other hand, you have structural stress points. Margin compression at Reese and G8 Education reveals that even growing companies are fighting harder for each dollar of profit. Switzerland surrendering on tariffs tells you that the global trade system has genuinely shifted. This isn't posturing, this is accommodation. And then there's technology. The AI wave is reshaping every industry, but Frog's story is a microcosm of a bigger challenge. When an entire sector gets disrupted by AI, even good companies in adjacent spaces feel the uncertainty. Security software, developer tools, data infrastructure, all of these are being repriced as investors try to figure out who the AI era's real winners will be. The Rolls-Royce buyback comes after what has been an extraordinary turnaround story. In 2020, the company was burning through cash at an alarming rate as the pandemic grounded virtually all wide-body commercial aircraft globally. Rolls-Royce engines power long-haul jets, the Airbus A380, the Boeing 787 Dreamliner, and they earn revenue based on flight hours. When planes stopped flying, their cash tap ran dry almost overnight. The company had to raise capital, cut tens of thousands of jobs, and restructure aggressively. New CEO Tufan Erginbilgin, who took over in 2023, set ambitious targets, and the company has delivered ahead of schedule. The stock has been one of the best performers in the UK market over the past 2 years. This buyback is the capstone of that recovery story. It's also a signal to the defense sector broadly. With NATO countries ramping up military spending, Rolls-Royce's defense business is in a genuinely favorable position. On the DAE Capital and Macquarie Air Finance deal, right now, roughly half of all commercial aircraft in service globally are leased rather than owned by airlines. Airlines prefer leasing because it preserves capital, provides fleet flexibility, and shifts asset risk to lessors. This business model exploded over the past 2 decades as aviation expanded into Asia, the Middle East, and Latin America. Post-pandemic, the aircraft leasing market faces a genuine supply crunch. Boeing 737 MAX problems and Airbus production backlogs mean new aircraft are in tight supply. That makes existing fleets, the ones that lessors like DAE and Macquarie Air Finance own, more valuable. Buying Macquarie Air Finance now, when airlines are desperate for planes, is a smart timing play. If this deal closes, DAE Capital would leap into the top tier of global lessors. Now let's go deeper on the Hong Kong yuan story, because the timing is significant. The Hong Kong budget is expected this week. Hong Kong Chief Executive John Lee and Financial Secretary Paul Chan face a challenging set of conditions: a slow property market, some fiscal pressure, and the broader question of Hong Kong's role in global finance as geopolitical tensions between the US and China reshape capital flows. Economists arguing for yuan internationalization support in the budget are essentially saying, lean into your identity as China's global financial gateway. Don't try to compete with New York or London on their terms, be the indispensable bridge between the global financial system and the Chinese economy. Concretely, this could mean expanding offshore yuan bond markets, creating new yuan-denominated financial products, building out the infrastructure for yuan-settled commodities trading, and making it even easier for global investors to access Chinese assets through Hong Kong channels. It's a bold vision, and whether or not this budget delivers on it, the debate itself is a signal of where Hong Kong's strategic thinking is heading. One more story worth noting that adds context to the Iran protests. The Middle East is in flux in multiple directions simultaneously. The Abraham Accords, the Gaza conflict, US-Iran nuclear tensions, and now domestic Iranian unrest. For energy markets, this matters because Iran is a significant oil producer, and any escalation feeds directly into oil price volatility. We saw oil push higher last week partly on US-Iran tensions. Watch that carefully as this week unfolds. And on Mexico, the death of El Mencho is worth keeping in perspective. Mexico's drug trade is worth an estimated $50 to $100 billion annually. The CJNG controls significant portions of that. El Mencho built the organization with an unusually sophisticated corporate structure, territorial control through violence but also through economic incentives for local communities. Replacing that kind of organizational genius is not easy. In the short term, expect violence to tick up as rival factions, including remnants of the Sinaloa cartel, which itself suffered a leadership crisis recently, probe for weakness in CJNG-controlled territories. Mexico's security situation was already one of the defining challenges of President Claudia Sheinbaum's administration. This development will test her government's ability to manage the transition. For the United States, where fentanyl deaths have claimed hundreds of thousands of lives over the past decade, the question is whether El Mencho's death actually interrupts fentanyl supply chains in any meaningful way. The grim reality is that the chemicals come from China, the manufacturing happens in Mexico, and the distribution network is deeply embedded in US cities. Removing one leader, even the biggest one, rarely collapses that kind of infrastructure. Let's also quickly revisit the Ukraine anniversary, because there's a dimension that doesn't get discussed enough in financial media: the reconstruction opportunity. Ukraine's reconstruction, whenever peace eventually comes, will be one of the largest infrastructure rebuilding projects in modern European history. Estimates range from $500 billion to over $1 trillion in reconstruction needs. Schools, hospitals, power plants, bridges, railways, housing. European governments, the World Bank, and private investors are already positioning for this. Companies in construction, energy infrastructure, telecommunications, and financial services are watching closely. This is the other side of the tragedy, that eventual peace will unlock enormous economic activity. It won't undo the human suffering, but it does mean that the long-term investment case for Ukraine and for European construction-adjacent sectors is significant. Keep that in your mental model. Rolls-Royce's $2 billion buyback, CF Industries' strong Q4, major M&A activity like DAE Capital chasing Macquarie Air Finance. These signal that CEOs and boards believe in their businesses. Animal spirits are alive. On the other hand, you have structural stress points. Margin compression at Reese and G8 Education reveals that even growing companies are fighting harder for each dollar of profit. Switzerland surrendering on tariffs tells you that the global trade system has genuinely shifted. This is not posturing, this is accommodation. And then there is technology. The AI wave is reshaping every industry, but Frog's story is a microcosm of a bigger challenge. When an entire sector gets disrupted by AI, even good companies in adjacent spaces feel the uncertainty. Security software, developer tools, data infrastructure, all of these are being repriced as investors try to figure out who the AI era's real winners will be. The Rolls-Royce turnaround is worth dwelling on. In 2020, the company was burning through cash at an alarming rate as the pandemic grounded virtually all wide-body commercial aircraft. They earn revenue based on flight hours. When planes stopped flying, the cash tap ran dry. They had to raise capital, cut tens of thousands of jobs, and restructure aggressively. The new CEO set ambitious targets and the company delivered ahead of schedule. This buyback is the capstone of that recovery. And with NATO countries ramping up military spending significantly, the defense business is in a genuinely favorable position. On the aircraft leasing market, Boeing 737 MAX problems and Airbus production backlogs mean new aircraft are in tight supply. That makes existing fleets more valuable. For DAE Capital, buying now when airlines are desperate for planes is a strategic timing play. If this deal closes, they leap into the top tier of global lessors, a powerful position in a market that isn't getting less important anytime soon. Economists arguing for yuan internationalization support in the Hong Kong budget are essentially saying, lean into your identity as China's global financial gateway. Do not try to compete with New York or London on their terms. Be the indispensable bridge between the global financial system and the Chinese economy. Concretely, this could mean expanding offshore yuan bond markets, creating new yuan-denominated financial products, building out yuan-settled commodities trading infrastructure, and making it even easier for global investors to access Chinese assets through Hong Kong channels. Whether or not this budget delivers on it, the debate itself is a signal of where Hong Kong's strategic thinking is heading. Back to Mexico. The death of El Mencho is a historic moment, but it's important to be clear-eyed about what comes next. El Mencho built CJNG with an unusually sophisticated corporate structure, territorial control through violence but also through economic incentives for local communities. That kind of organizational depth doesn't vanish overnight. History tells us that cartel decapitations rarely end the organization. They reshuffle power. The Sinaloa cartel survived the capture of El Chapo. CJNG is likely to survive El Mencho's death. The real question is how much violence erupts during the transition, and whether rival groups can capitalize on the power vacuum. For President Claudia Sheinbaum of Mexico, this is both a victory and a test. A major security success, but now she must manage the aftermath without letting the transition spiral into a wave of cartel warfare that claims civilian lives and destabilizes regions. The coming weeks in Mexico will be worth watching very closely. The WTO, which was supposed to adjudicate trade disputes, has been effectively sidelined by the major powers. Bilateral deals are becoming the norm. Countries are doing the math. Is fighting tariffs worth the diplomatic cost? Switzerland, a country that exports precision machinery, pharmaceuticals, and financial services to the US, has apparently decided the answer is no. What Switzerland does today, other smaller economies may do tomorrow. The multilateral trading order is fraying, and Monday morning is a good time to internalize that fact. So let's bring it all together for your week. Markets are showing two faces: confidence from the deal makers and buyback launchers, caution from those watching margins compress. Geopolitics is loud this week. Ukraine reaches for years of war. Mexico just had its most significant crime story in a decade, and Iran's streets are restless. Hong Kong's budget is coming and could signal the city's next strategic move. Stay sharp, stay informed, and remember, the best investors and entrepreneurs aren't the ones who react fastest to news. They're the ones who understand the deeper story behind the headline. And that's exactly what we do here every single morning. That's your Monday Digest for February 23, 2026. Thanks for listening. Share this with someone who needs a good briefing today. I'll be back tomorrow with more. Have a great week, take care.